One.
17 Mondays in a row. The market's in the green. 6-day winning streak. Spoos have not seen that closing price yet today. The Bulls got some work to do. Maybe the Bears will pull their head out of the clouds and make an attack. But we got some good earnings to talk about from Datadog lifting the cloud sector, and we have some earnings that aren't so good. We got Derrick Oldensmith at 8:35 with some trading setups here on T3 Tuesday. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
Welcome, traders and investors. We're starting out just a little bit in the red, 8 3/4 handles, 9 3/4 handles, mid range at 43.7350. Buck rebounding after a bad day yesterday, but we are now up 34 cents at 105.44. Bonds being down yesterday really didn't hurt us that much, up a half a point at 113. You hang around support too long, like 80 bucks in crude, you take it out down a buck 66 at 79.15. Gold in the red by 23.50, now distancing itself from 2K. Silver in the red, much more on a percentage basis, down 63 cents to 22.60. Bitcoin, the futures are down $310 at 35,010. Let's bring in Triple D here. Triple D, are the Bulls really going to make a stand today and make it 7 up days in a row? I'm getting it just feels like we're just hanging up here. And where's the catalyst? What's the next move to take?
It wasn't a good day for the Bulls yesterday. So people will say, "Oh yes, S&P up because S&P blinders once again." Majority of stocks were down yesterday. A lot of smaller tech stocks got crushed. It was the big seven, the magnificent seven, holding up the S&P once again. IWM had a terrible day. We kind of were concerned. TLT didn't have a good day. IWM followed suit. We've been talking about the TLT and the IWM being linked and obviously at the hip there, connected at the hip. TLT bouncing a little bit this morning here, so that helps a little bit maybe to the TLT, but it's not much of a bounce. Overall, I would say yesterday was not a good day for the Bulls.
Okay, all right. Let's bring in Money Mitch here, and he's got a real good report. Let's start out good. Let's start out with the good stuff, Mitch. What do you got for us on this Tuesday?
Datadog Q3 EPS coming in here at 45 cents, beats the 34-cent estimate. Revenues of 547.536 million, beat the 524.125 million estimate. They do see Q4 adjusted EPS at 42 cents to 44 cents versus a 35-cent estimate here. So good outlook there. Revenues also a little bit higher here. Bottom end 564 to 568 million versus a 543.939 million estimate. So pretty good beat there on revenues. Also putting out their full fiscal year 23 EPS now to 152 and 154 versus a 133 estimate, and revenues at 2.103 and 2.107 versus a 2.06 estimate. So not bad here as Cloud is going to get the lift.
Yeah, all cloud stocks are going to lift on this. I just say, like, the moves on some of these earnings reports seem just crazy. I mean, it is a good report. Don't kid yourself. Stock should be up. But I mean, it's like we bring something up 20% every single day. Fairly large companies, we knock something down 20 or 30% every single day.
Yeah, the
I mean, and some of
volatility.
these reports, aren't even that bad. It's just like you miss by a little bit and they crush you. You beat by a little bit and they rally the hell out of it. So, I mean, it's just this market we're in. It's very, the price discovery here off the earnings report is really incredible. Just nobody wants to be on the other side. Nobody providing liquidity into these reports, and they really move. So, I mean, a 21% move seems way overdone, but we know what we've seen before is it seems like in the last, few days, at least the last 6 days since the new bull market has begun, I'm not saying it's going to continue, but this new mini bull market that we're experiencing has begun, is there's follow through. And, we get these big moves and you think, okay, I'm going to go fade it on day one like a Roku, and boom, no, there's more behind it. So, I mean, I've learned the hard way. You just can't fade these moves on day one.
Boy, oh boy, I'm just going to say you got some nice confluence out there. I don't know how many people are that active that were long the stock, but your pre-market high comes in at 101.40. And right here on the dailies, the upper right chart, you had two highs in that area, 101.16 and 102. You almost stopped in the middle. People are taking profits here. I don't know if you're going to get another look at that number. We seem to be losing a bid here at 96. In order to give you support, I would need to be a magician because the top of yesterday's range hit 82.87. So nice report we're leaking, Dennis. Is it flowing over to any of the other cloud stocks?
Yeah, for sure. Twilio, you think about. I can just go to my filters. Basically, every stock that's pretty much up is a cloud stock. Salesforce.com, your biggest one, obviously. That's not going to move as much because of the market cap, but it is trading in the green here. You could go into the CrowdStrike, Zscaler, Net. So looking at Cloudflare, Twilio. I mean, I'm just going through my filter here and just cherry picking all the cloud stocks.
Would Oracle be there? I mean, that's a big.
Yeah, Oracle's trading up. Microsoft is trading up. This is all off this Datadog report. Google's trading higher here as well. Anything that's got a little bit of cloud in it is trying to fly to the clouds today here. That's a bad pun.
I'll let you get away with that one. Yeah, we'll see what happens. I mean, Microsoft's been the big mover, right? Let's just be honest. That has continued on a nice trend since their earnings and is almost back to when they got hit on July 18th off their earnings, which was a high of 366.78. Right. You guys think that we can take that high?
Let's just take this into perspective here. I mean, the tech rally in the last 7 days has been nothing short of incredible. Yeah. And a lot of other stocks not participating. This continues to be tech or bust. If you're long a lot of other stocks, you hate this market. If you're long a lot of tech, you love this market. And, we get a sell-off in September and October, fairly significantly on the Qs. We get 3/4 of it back in 6 days. I mean, you cannot argue with the bull market in tech. It has been there. Tech has been in a bull market, it seems like, for a decade. Pretty much has. Every dep gets bought. The Apple earnings were not good. The stock got it down to buy it right back. They just can't do it. Nvidia is going to report later, obviously, in the quarter here, but it falls under 400, catches a few people, and then bounces right back up. AMD reported a terrible quarter. They turn around and start buying, and they can't stop buying it. They are buying dips in tech. So, as much as they were buying dips across the board 3-4 days ago, that has kind of subsided, but they are still fully buying dips in tech. Tech continues to merge.
And the money is just hiding in the big names. And I think that's important to kind of note.
Always has.
Yesterday, it was really, really interesting just watching those bigger boys be up and the market kind of heading down. We'll see what happens there. Let's get to Uber Technologies. Q3 sales of $9.29 billion beat the $8.99 billion estimate. Their Q3 gross bookings were at $35.3 billion, up 21% year over year. Mobility gross bookings were at $17.9 billion, up 32% year over year. And delivery gross bookings at $16.1 billion, up 18%. Trips at $2.4 billion, up 25%. So I don't know if it's just cost and prices going higher, but these year over year comparisons are pretty high here for Uber.
It's been a big move off the lows. That's the one issue Uber has. Is the reports a week ago, and this report's probably they're up significantly on it because it was in the gutter. But I mean, it just rallied 20% ahead of this report in a week, from 40 to 48. Yeah. So we sit here at 48 again, maybe a victim of obviously its own recent performance. Datadog alternatively rallied nothing. then maybe that's what we've got to look at. Going back to what Spinner talks about in the chat, what I talk about as well as expectations going in, just looking at the chart and saying, here's a stock, Datadog, that's actually sitting on the lows. It did not participate in the rally whatsoever. It's the one that really goes. And then you have Uber, which rallies 20% in a week, reports okay numbers, but again, too much too fast. So expectations are everything in this market.
This same thing as the Datadog chart. I mean, you ran into some daily resistance here, and you have been able to punch through. There's several highs in the upper 48 handle. You did pop over 49 yesterday, so or excuse me, in the pre-market. So first things first, what you bulls want to do. So you want to take out yesterday's high at 48.30. That's only it's not too far away, 18 cents away. No, the close was, excuse me, 48.14. So, you get a bid at 48. Someone's willing to buy this at 48. Maybe work your way up closer to 49. Kind of a tight range yesterday. So I think the key to see what Wall Street thinks about this report is holding yesterday's low at 47.43. Wow, they really jacked this thing down, Dennis. 44.18 is your pre-market low. I don't know what they saw in the report that they would knock it down $3 from there. But then look at the stepbrother lift, and lift is still lift. Look at that thing. That just down hanging at the 1050 area. That's got a double top at the 1074, 1076 area.
Vertex Pharmaceuticals here. Let's take a look here. And this is an interesting report, but not doing anything. And I think the algos might have got this wrong because I do see a spike to 393.39. I wanted to ask if you guys have that print also. VRTX here, Q3 adjusted EPS at $4.08, beats the $3.98 estimate. Sales of $2.48 billion, missed the $2.5 billion estimate. They raised the fiscal year product revenue guidance from $9.7 billion and $9.8 billion to $9.85 billion. Pop and a drop there.
Again, same story. Expectations here. Stock runs up, from 355 5 days ago. Actually, it's 363. No, 355. The open 355 5 days ago to 385. Goes up 10% in 5 days. So now expectations are higher. I mean, sometimes it's just simplistic. And, that's what we try to do on the show is just keep it simplistic. I think you look at the charts. And again, I tweeted out yesterday, support, resistance, trends. Look how much a stock has moved into the reports. They've moved straight up into the reports. It means they got to blow it away. They've moved, not moved up or moved down into the report. They don't have to do much. We're back to that again. So VRTX moves straight up. Again, this isn't your sexy tech stock here either. Yes, Vertex, is a great company. Yes, they got some great drugs in the pipeline here. But this isn't, cloud. This isn't a storied tech stock here. It's not a stock that's moving around 20%, on a good report. So it's a little bit more of a defensive name. They're not into that right now. Right now, they're looking at buying dips, and they think that we're going into the new bull market. That's what the market thinks. I don't know if I agree with that or not, but that's what the market thinks, and they're not buying stocks like Vertex right now.
Mitch, I did see that pop up there. On my machine it says 393.39. You are opening at yesterday's low, so the bulls got to get a bid here. 379 exactly was yesterday's low. So very important to get a bid there. It doesn't look like it's going to be holding. Underneath that, you can see the two daily lows in the way. Next one's down to just under 376 and under 368. So 976 shares have traded. But if someone decides they like this report, they can buy it right now, right just at yesterday's low.
Emerson Electric Q4 adjusted at $1.29, misses the $1.31 estimate. Sales of $4.09 billion, missed the $4.19 billion estimate. They do see Q1 adjusted EPS at $1 to $1.05 versus a $1.12 estimate, and net sales growth at 14 to 17.5%. Emerson sees fiscal 24 adjusted EPS at $5.15 to $5.35 versus a $5.25 estimate here.
This is just a good example of this market. This kind of stock they absolutely don't want. Cyclical, not tech. Defensive to a certain extent, lower PE names. The lower PE names just continue to go lower. I've learned that the hard way. This is the market that we're in. It's like, you look at a data dog, and I don't know what the P on data dog is, 40, 45. I mean, these are the ones, beats by a little bit. It's like, oh, that P, they're going to grow into it. And here's, like, oh, there's opposite effect, P of 12, 13 coming in here. They lower guidance, like, oh man, it's a value trap. So, I mean, it's everything on value is guilty until proven innocent, and growth gets a pass, even if, they, obviously have high valuations here. So continues to be the tale of two markets. They don't like cyclicals. They don't like any small caps. They don't like anything that needs finance. They don't like banks. They don't like this, but they love tech. You got tech versus the world.
Tech versus the world. Not much here. I mean, this is a big move for good old Emerson Electric. I don't see anything in here until the lower 86 handle. Things are kind of quiet. Just right now in the pre-market trading, 25,000 shares have traded. But if you look right here, that'd be a big move. I'm sure this is over the expected move for Emerson Electric here. Man, I haven't heard that name in a long time. But you Bears could, maybe hold out for 86 as a potential support point. And what do we have from you? Had a pretty big range yesterday. Wow. But God, $3 to get to the bottom of yesterday's range. I think that's going to be tough for Emerson Electric.
NXPI, NXP Semiconductors Q3 adjusted EPS here, $3.70 beats the $3.59 estimate. Sales of $3.43 billion beat the $3.40 billion estimate. NXP sees Q4 non-GAAP EPS at $3.44 to $3.86 versus a $3.61 estimate. Total revenues at $3.3 billion to $3.5 versus a $3.43 billion estimate.
The same story. We're just doing these charts here. I mean, NXPI got beat up, but it rallied again. We went from we've rallied up a little bit. You get the 50% retracement. I don't know. This one's kind of in the middle of nowhere, though.
Yeah,
some stock charts are easy. Some stock charts are just like pass. This one's a pass for me. Joel, I don't know if you got a level for us, but
no, because you're working your way. You're below this candle. I would just give you, if you're looking for a level on the downside, the next thing I could give you is Thursday's low at 173.31. Yeah, street kind of leaning the wrong way into the report here. Going in a little bit long, and now you're gonna have some sellers.
This one's an interesting one, not one that many might know. Transmedic Group, Q3 EPS here at 78 cents of a loss.
Give the symbol,
16, TMDX. TMDX. Yeah. EPS loss of 78 cents, misses the loss of 16-cent estimate. Sales of 66.43 million, beat the 49.19 million estimate, but they do see fiscal year 23 revenues at 222 million to 230 million versus a 194.18 million estimate. This is giving them a pretty significant lift here. TMDX. New stock, man. At least
don't follow this company. It's a huge move, 41%. I've learned the hard way. It's hard to just come in and fade anything, especially when you don't follow the company here. I would say just spitballing numbers out there, $60.
Yeah, I thought you were going to
nice round number. You had a bunch of highs there in September, so I'm stealing your stuff. I'd say that's a logical stopping point, but I'm not shorting it.
Yeah, Mitch Triple D with the steal here, good enough for a horizontal line. And it was really interesting too is that all those days you bumped up at 60, you had problems at 58. That was like that range for the longest time. So yeah, and that's what you hit in the pre-market. So better get a 58 bid and heads towards 60, top of yesterday's range, way down at 43.36 for Transmedics Group. On the upside today, Des, we just got a little sneaky rally there,
TLT, again, keep it on your screen. We just rallied 30 cents. It's so leading the market, IWM, that is. I tweeted SPY yesterday. I should just be shot for doing that because it's the TLT and IWM. SPY does whatever the Magnificent Seven does.
I like that.
IWM gives me a better feel for what overall stocks are doing. Yes, it's a lot of small caps, and it doesn't encompass, but it encompasses 2,000 companies. So it gives you a feel for like the capital markets rates. TLT linked with IWM again, because a lot of smaller companies are very dependent on financing. And as financing goes higher, that hurts them. I think let's have a bigger discussion here again, because chat's
Okay.
like talking, like all over the place with, the overall economy here. It's difficult to call anything. Like I've got multiple people saying, they're worried about my cash position. I raised it more yesterday. I raised more cash. Talking just this is a discussion. Again, I'm in Canada. It's a different country, but you get a feel. And obviously, we know rates affect us more because a lot of people don't have 30-year mortgages. Pretty much nobody has 30-year fixed in Canada. So rates are affecting us sooner than it would in the States. But talking to my real estate buddy again, I really get a feel for what's going on. He's got like a couple. He's got he's trying to sell. He's like nothing's selling, but he's got a buyer, and the buyer just has the choice of the world here in Canada right now. They're looking, at a town that's not too far from here. There's new developments that have been built by the builders, and there's hundreds of brand new houses sitting there empty. Hundreds of brand new houses sitting there empty, and we have a housing shortage in Ontario right now. So like, why are these empty? Because they're $1 million homes. People can no longer afford $1 million homes in Ontario. And you say, holy cow, $1 million homes. Well, what are we talking about, $1 million homes? Well, the average house in Canada is $880,000, I think. So, I mean, again, your Canadian dollars, so you got to knock it off by, a third, basically. But, when you're looking here and you're seeing subdivisions full of, brand new homes that have been built and no buyers. And he says there's all incentives for buyers to come in, like they're knocking this off and giving you this. I mean, it's such a buyer's market. I haven't seen a buyer's market like this in real estate in Ontario in a very, very long time. Again, Canada is in an official recession here, 2 consecutive quarters of negative GDP. Maybe we're completely different than the States, but it's still very linked, North America. So Canada is fighting it here right now. You look at the Canadian banks, for instance. Bank of Nova Scotia has bounced recently. I did pick some of that up. I have some Bank of Montreal as well. But I mean, you give this perspective, you just look at what they've done. Like bring up that BNS, longer term chart. Here's a stock, a bank that was $74 a share. It's back down to the COVID lows, of 40 here. There's only 6 big banks in Canada. And BNS, now yields 7% dividend as well. I mean, these are kind of attractive from a long-term perspective, but not if we go into a housing crisis. So maybe Canada is completely different, and maybe I got the Canadian blinders on, and the U.S. is not going to fall into a recession here. But I tell you right now, in Ontario, people are starting to run out of money. They've still got money for the little stuff, but they don't have any money for the big stuff. So I think this eventually starts to hit everywhere. Higher rates for longer is eventually takes its toll. And we talked about the path. First, they rack up the credit card debt. Then they deplete all their savings, maybe at the same time. That has happened now. So now you're at a point where this lag is starting to going to start to show up. And it's going to be big ticket stuff, not selling. We're already starting to see that in the States. We know what's happened with a lot of these cyclicals, generators. That's why I sold my Generac. Nobody's buying a generator. It's a luxury item. People can't afford that. Can't get the financing. Solar stocks, financing. The customers can't afford the financing. So tech's still the best place to be, because we've talked about the Apple, the luxury of an iPhone, which still has 0% financing on it. It's like a small luxury item that people can still afford, which keeps that party going. But at the same time, to put the blinders on and say, we're going back to all-time highs, we're going to get past this. We will not go back to all-time highs, in my opinion, until rates start to go significantly lower. The only reason rates are going to start going significantly lower is the Fed lowers them. And the only reason the Fed's going to lower them is if the economy falls off a cliff. So that's why in 2024, I believe it's going to get a lot rougher. I think Money Mitch, you're still with me on this.
100%. I mean, at the end of the day, the consumer though is relentless. Though I will say that, and it's really impressive here how we've stood up to all this pressure. Right? Let's just be honest. And that's why some people still think that the soft landing is a narrative that can happen, because the consumer still hasn't broken. Let's just be honest. And the jobs numbers need to go higher.
They are. I mean, you are seeing the jobs numbers move up, and then that was one thing that we had different people on the show. I was like, the Fed is getting what they wanted. I mean, bad news is good news for now. That but hey, what's going to happen? Is that it goes 3.9, oh, so that's low, and then 4.3 or 4 point, you get that one big jump, and then it's not going to be such great news when you get that big jump here. But
I think this brings us good to DR Horton, right? They reported.
okay,
Let's
yep.
talk a little bit about
Sure.
that. DR Horton's Q4 EPS here, $4.45, beats the $3.93 estimate.
Killed it.
Sales of $10.5 billion, beat the $10.01 billion estimate. Their Q4 home sales revenues of $8.8 billion on 22,928 homes closed. Net sales orders increased 39% to 18,939 homes and 34% in a value of $7.3 billion. They do see fiscal year 24 consolidated revenues of approximately $36 billion to $37 billion versus a consensus of $36.2 billion. I've talked about this one, and I just feel like they have no option but to take advantage of prices right now, because I think that this is an opportunity for them to sell at higher prices before we go through some kind of trouble that's up ahead.
One thing to consider, and we don't talk about this a lot, I'm wondering if they're building smaller homes because,
No,
again,
they're not.
talking
They're
to
not.
they're not?
Good point.
They're not, man. At least
How
I
do
see.
you know that?
Because I've been looking for houses here in the United States.
Okay.
I can tell you that,
in
Dennis.
Ontario, what is happening right now here, Mitch, is the home sizes they're building now are getting a lot smaller.
Okay.
So they're building a lot of like fourplexes, like where obviously, you're buying one plot of land, you're putting 4 homes on it.
Yeah.
So you're seeing a lot of that go on. Apartments. My brother-in-law working, he's an electrician working in an apartment building, was talking to him yesterday. They're building little, 6, 7, 800 square foot apartments, little one
that's
bedroom
not
apartments.
happening here.
Those are going up
much.
here because we do have a housing shortage. But at the same time, people just don't have the money to get $1 million financing. So what is happening really is you're seeing a little boom actually happen in like some of the building pockets where they're building smaller stuff because people are like all of a sudden cannot afford $1 million home anymore. Like if you go 2 years ago, everybody could afford $1 million home. It seemed like in Ontario, not everybody. People are going to say, oh, they couldn't, but a lot of people could. You've priced a lot of people out of the $1 million homes. It's just simple math. I mean, you take you got a mortgage 2%. And you all of a sudden jack it to 8%. Well, that, if you've got a $500,000 mortgage, which a lot of people could afford, you think about your payment, on every $100,000, when it goes up 6% is an extra $6,000 a year or an extra $500 a month on every 100 grand. So you go up, 500 grand, and these houses have moved up that much, nobody can afford them. So, I mean, that's why these $1 million subdivisions, these new $1 million subdivisions are sitting empty. But you're getting these smaller, pockets where they're building, more houses, smaller houses, or going into, apartments and building those. And those are actually doing quite well because people are trading down, not being able to afford, obviously, So I'm wondering if that's going to happen in the States as well, where people start to get tougher, where they just start building smaller homes. So maybe these home builders, maybe it's I don't know, I don't follow them all closely enough, but I'd start looking at what are they building? Are they building bigger homes or smaller homes? Because the smaller homes, there could be demand for that.
There's a couple things. There's smaller families, like people are having smaller families, right? You're not as
that
many,
is true, Joel.
so you need smaller units. Plus, so that's the big colonials. I will say the eyeball test around here, Dennis, man, they're still building. And I mean, and what they're building, what I'm seeing more of is like, the baby boomers are getting rid of their houses and they're going into, they're condos, but they're independent units, and they're still, they're not like 4 or 5,000 square foot, colonials, but we're still seeing a boom around here. So I'm not, I don't know how long
But
that's
is that
gonna
boom
last.
shows it a trade down is what my point here is you're seeing stuff still build and I'm seeing it here as well. But is there that like trade down? Maybe it's not just all boomers that are looking to just downsize. Maybe it's actually people who can't afford to get so take away the person who's sitting with the 30-year fixed mortgage. Let's take the Walmart worker who's coming in right now and trying to be a first-time home buyer, in your area, first-time home buyer. Mitch, like just coming in, your area, first-time home buyer.
Yeah, that's why I was going to bring in the message that Dunka Day put in the chat here. North Carolina is seeing a housing boom. Why? Because they've never been able to sell houses, like especially like your common house, your 3-2, over let's say 300,000. And now those houses are selling at 400, 500,000. They usually been selling houses here in North Carolina for under 300.
Yeah.
And so
Well,
now
what
these houses are worth twice the money. So they're just pushing in every land they can build houses. Everywhere they can build, they're trying to build. And that's what I see here in North Carolina.
And that's what they've done in Ontario in the last year. The problem is now there's nobody buying them. It's just like it just
That's the
stopped.
problem. Yeah,
It
that's the
just
problem.
stopped. And you wonder if that doesn't happen here, that a lot of these builders building these big, and I'm talking to other, so I'm fairly connected in with a lot of builders. Obviously, I've built a home, built a shop, but I've got friends that are just in the industry. So, and again, talking Ontario may be completely different than North Carolina, but what builders do when they're building these huge complexes, like, they're buying, huge lots and building hundreds of houses in these, is what he says is when it starts to like go like that, they just slow it down. So they've got that and they just start slowing down the builds to try to like let the demand catch up. So they like timing it all. And right now, maybe Money Mitch is still, there's enough housing shortage in the area where maybe it's still there. But I got to think eventually these new home buyers, it's just common sense. I mean, if you have interest rates at 2% and you all of a sudden jack them to 8%, the average person isn't going to be able to afford as much of a home. So I still wonder that they aren't building smaller homes, that they aren't going to be starting to do that. But, this is a full discussion. It's about the economy. Sometimes the stock market's not linked to the economy whatsoever. Many times it's not. But, at certain times it does reconnect. When earnings start to go down, earnings power starts to go down, it starts to reconnect. I just wonder if we don't reconnect, next year.
Just a real quick technical note for our DR Horton traders. I mean, this is a big old area, this 120 area. We've gotten back half of the move. We snuck our head over 120 on 3 different occasions since late August, and haven't a couple other times we pulled off hard. Your high from Friday was 120.79. The closing high of the move was at 118.86. So if you're looking for more on this one, it's very important to clear that 120, get a sustained bid. I just looked at Toll Brothers and look at this thing. This thing is back up in the all-time high region here. Look at that sneaky Toll Brothers up there. Right near its all-time high. And once again, maybe just because it's on the higher end. And then what's the other home builder that I like? Oh, KBH. I think that one's been a little bit weaker, but maybe it's regionally based, like North Carolina and Michigan are still doing okay. Dennis, is there any Canadian home builder stocks that you can think of?
That's interesting.
Yeah.
I wouldn't be buying those right now because I
No,
think
I
it's going to
know.
get tougher for
Opposite.
them, shorting them more than
Opposite.
anything.
Yeah, that's
I
what I
don't
was
know.
thinking.
I don't know the answer to that question. So actually, I live in Canada, but I trade the U.S. markets. I hardly
Yeah,
ever
I
look
know.
at
I know.
Toronto.
I was just
I know like
curious.
the big 6 banks. I know your oil companies. I know all the ones that trade in the U.S. So if it doesn't trade in the U.S., like as an 80,
So if you can
not
come
as an
after
ADR,
it,
but
you
it
know
traded
it,
in the
right?
U.S. on a multiple exchange, like I'm probably not looking at it. People ask me about the Canadian markets all the time.
Yeah.
I don't know anything about the Canadian markets. I'm just looking at the real estate market. I'm looking at outside, but I don't know anything about the Canadian stock market.
All right, guys, we're going to go ahead and get to Derrick Oldensmith, senior trader and managing supervisor at T3 Trading Group. And you guys see that QR right on the screen. I'm going to also put it in the bottom right corner in just a second. So if you guys want to get a free ebook, learn a little bit more about prop trading, check this out, guys. Hit that link and let's go ahead. Let's get to our segment today. All right, let's get to the action. How we doing, Derrick? It's good to have you.
Hey, good morning. It's great to be back. How are you?
Doing great. Ready to get after it. Talk a little bit about some markets. Of course, it's been not an easy road, but a crazy little drive back. I know that you were on just last week talking a little bit about Chewy and playing a little bit of that momentum going back. Are you still riding that momentum? And what do you see at least in the indexes here?
Sure. So I had turned really bullish just a little bit over a week ago, going into the Fed, kind of expecting the dovish pivot that we got, which I didn't think that the market itself was expecting. And then there was just a huge follow through in just about everything that you could have possibly been involved in, whether you're in big tech or growth. The growth was weaker again yesterday, or the banks, which were a big focus for me. The regional banks were a big focus for me to the long side, expecting that if TLT could get through that $85 resistance, that we could get a lot of follow through. Now, at this point, it's a massive move. We went from one of the most oversold that I've seen the market to one of the most overbought that I've seen the market in an extremely, extremely short period of time. With that said, I still think it's very hard to not be long. What I've done into this up move is I went from probably being the longest that I've been this entire calendar year, just a little bit over a week ago, to piecing out of that on the way up and beginning to actually build into some hedging shorts with the spies and the Qs last Friday as we began to extend. But that's really just more for a brief trade to see how we satisfy upside extension in this market. Because if you're looking at like a tactical flow of funds right now, it's very difficult, I think, to be bearish on this market for the rest of November. So I'm still looking at growth. I'm still looking at
Yeah.
banks, but after a big move, markets work in periods of expansion and consolidation over time. That was a big expansion period. We need some correction via time or price here.
Let's keep working backwards here. Let's go towards maybe the sectors that you see out there. What do you see hot right now? What industries are you looking at? Or maybe it's even to the short side. What are you seeing out there, Derek?
So I like a broad-based long portfolio right now. I like being involved in big cap tech because it's hard not to be, and the strength there has just been incredible. Even if you look at how Apple recovered post earnings, I've been looking for an uptick in growth as yields come down. We had a big 2-day move where breadth had really improved and the IWM got a lot stronger. So we saw small caps, mid caps growth get a really big 2-day move. I didn't like the relative weakness that we saw yesterday. That's something that I'm eyeing broadly, the ARC complex names, if you want to call it that, just for a higher percentage return on the upside. If the TLT pullback gets bought back up, which I think that it will. So that's definitely a focus for me. But everything else, for the most part, I think needs to reset. Like I still like financials, but the move was so
Yeah,
big. How do you
Yeah.
come in and add exposure to
exactly.
financials here and now?
Yeah. What do you like using for things like that? Are you kind of a moving average? Do you like different moving average? Are you into exponentials, simples? Would you be looking for some pullbacks to a moving average to maybe play buying the dip here? What would you be looking at there?
Sure. So I use an 8 and 21 EMA on my charts, and I think
Okay.
I use them in a little bit of a unique way compared to other traders that I've met. I broadly consider the space between the 8 and 21 EMA to be what I call technical equilibrium for any market that I'm looking at. So if we're trading above that 8 EMA in a rising market, we're extended by some degree, and extension can be more or less extreme. What we've seen really consistently over the last 2 years is every time the S&P or the NASDAQ, this SPY or the QQQ gets $10 plus away from the ADMA, whether it's on the upside or the downside, it's not only difficult to get continuation, but it's been a great opportunity to come down the other side. And again, it was just a week and a half ago that we had $10 plus of extension in the SPYs and Qs to the downside, away from that ADMA, away from that, in this case, lower band of equilibrium because we were still trending down. And then it was just Friday last week that we got $10 of extension to the upside, just an extremely fast move. So that's when I'm piecing out again of those longs, building into shorts, and I want to see how this market corrects through time or price to that ADMA again on the daily chart, how that catches up.
Derek, we caught so many people maybe short, obviously, we got a failed breakdown at Nvidia under 400. And all of a sudden, it just boom, it turns around and goes up 15% in basically 4 trading sessions here. Is there the possibility that we just have underneath demand because there's still shorts caught here?
Yeah, absolutely. Sentiment at this point is still extremely negative. CTAs are net short $52 billion in US equities, and they're set to buy throughout this week, no matter what the scenario is in the market. I think CTA flows in a flat tape are the highest from a buying perspective that has ever been expected on a flat tape for this week, which is impressive.
Wow.
It's at the same time as we're coming into the strongest month of the year for buybacks. I read a Goldman note that says that they're expecting $5 billion in demand per day in buybacks throughout this month, basically starting today. So there's a lot of flow of funds that are really positive in this market at the same time where people are caught short and sentiment is still really negative. It's ripe for a solid upside squeeze. With that, and that's why I'm saying it's very difficult to be short right now in this market, but you still have to pay
Mhm.
your extension. Friday last week, we just hit extreme extension to the upside. and you need time or price correction. But I think dips in this market are to be bought right now.
All right, guys, I do want to give you guys an ability to keep up with Derrick and everything that he does. Like we says right at the bottom, we're always looking for real traders, right? Real time. He swing trades and day trades. I got to talk to him sometime on my swing trading show, but always good to have that outlook. Check this out, guys. This is that ebook. I'm throwing it up in the chat here, and let's keep it moving.
So outlook here, I mean, it's such a tricky market, Derrick, because we've run so far. So I'm scared to kind of chase stocks here, but at the same time, I'm kind of scared to short stocks because all the stats you just gave that we could have continued buying in here. So how do you approach it as a trader here? Like right now for the next week, just looking not ahead the next month or the next year, but just looking ahead into the next week. How do you approach it when you've run this far, but it's a little bit maybe early to start shorting stocks?
It's a great question. So one of the things that I always preach to the traders that I work with is one of the keys to success in trading is knowing when you need to be aggressive, knowing when you need to go pedal to the metal because there's a ton of opportunity out there, and knowing when you need to be a little bit more passive and let things reset up. I think right now and for the last 2 trading sessions, and I'm going to say the same thing today in my morning meeting to my team, I think we're right now in a less is more scenario. Be patient. Let the market
Okay.
reset up. Let the setup come to you. And then when the setup is there, then we can see, okay, we created a beautiful bull flag here over the course of 4 days. Now the setup is there. We can go in for the longs. Or we've price corrected and the market's not creating a pivot and we can try to go long off that pivot. Wait for the setup to come to you. Don't force it if it's not there. Where we are this morning, where we're set to open this morning, is an area that I consider to be no man's land. That's what I call it. We're in a spot where if you short here, you could get your face ripped off on a short squeeze. I don't like the risk reward on the short side. But the long side, we're still a little bit extended from the huge move that we had that
Yeah.
makes it a not great risk reward on the long side. Like if you're coming in and you're looking to buy SPY right here at 435, where we're basically trading pre-market, the market could pull back to 429 and still be healthy and bullish and create a higher low at 429. You don't want to be bag holding $6 against you. You may still end up being right in the long side, but the pain that you're going to have to endure in the meantime just makes this spot right now not an ideal spot for new longs or new shorts. So be patient. Cash is a position. I've got longs on still, but I've made my book a little bit more neutral over the course of the last week, and I'm just waiting for the setup to come in. I'm waiting for that signal.
The old mute
Joel's
trick.
on mute. He does it once a show.
Well,
See, he's like 90 years old, so he does this every once in a
yeah,
while. Here, Derrick,
yeah.
you're new to the show, but Joel's.
What's
he gets
up,
his mute
Joel?
button
What
go.
do you want to
Joel,
jump
you
in
want to
here
ask
with?
a really good question, though, so jump in here.
No, I took it off mute.
He was totally
I was like, is he trolling me right now?
He is trolling us. Yeah.
What about the
Good day.
laggard trade? I mean, like the stocks, like you're looking and and I should pull up some examples. I mean, people are like, well, this rally's already gone. I missed a magnificent 7, but this is just kind of skimming along the bottom. There's 2 ways you can look at it. It's like, well, if you haven't gone now, you're not going. So is that something you're doing? Maybe you're looking for some of the laggard trades, or the laggards are laggards for a reason.
Yeah, I years ago in my trading learned to be very careful about laggards because oftentimes they are laggards for a reason. I remember like years ago looking at Uber and Lyft and seeing a huge move to the upside in Uber, and I was like, I'm going to come in and buy Lyft. It's going to be a catch-up trade, and Uber just kept going and going and going, and Lyft was a dog, and it didn't do anything. So I don't necessarily love the laggards. With that said, growth has been a little bit of a laggard, especially if you looked at the relative weakness. And I think that with an interest rate move a little bit to the downside, which is what I'm expecting, I'm expecting bonds to still get bought here for a period of time, that we actually may see some catch up in growth. So it's something I've got my eye on is broadly that ARC complex of stocks.
What do you look for a turn here? I mean, like potential double top in the S&Ps, the highs from Friday and Monday. The buyers just didn't give in yesterday. Are you looking to identify like the kind of pattern on the upside, or you say, I'm not going to try and pick a top. You're going to pick an area of weakness, and then if that area just breaks, like right now, you got a good level because yesterday's low was 43.64 and a quarter. We bounced over, off 43.66. So you got your support. How do you like to do it? Do you like to try and pick a top or sell on weakness?
So I definitely don't like picking tops and picking bottoms. I think it's a fool's game and a great way to lose money in the long run. What I do is I try to pick places where there's a high probability of a retracement in the other direction, and then I have rules in place for my trading on how I can potentially capture a retracement that becomes a reversal. I believe as a general rule, counterpoint trading is a lower probability game. The question that you got to ask yourself right now, though, is which way is the counterpoint? Because I don't think that we've actually reversed here. We haven't gone from a pattern of lower highs and lower lows in the spies to a pattern of higher highs and higher lows. It's just been straight up. So we need some sort of higher low to come in this market. So that's why I'm watching really carefully here over the course of these several days, and so far so good the last two trading sessions on how we digest that big gain. If we can continue to sit up here the way that we did yesterday and create a bull flag in front of that double top resistance that you were referring to, that could be a phenomenal setup for us to actually break out. The flip side is we've still got a decent amount of extension here. So if the market pulls back, that's why I built into some QQQ shorts via the TQQQ leveraged ETF, UPRO shorts via or SPY shorts via the UPRO ETF, just in case that pullback happens. But I definitely want to be on the long side of this market right now, just from a tactical trading perspective. I want to see how the setup actually comes to play. Do we get that breakout via bull flag? In which case I will be all over liquidating my shorts and capturing the upside move on my longs? Or do we get that pullback here, which could easily happen? We still have a good amount of extension. We could pull back for a day or two, create a higher low, still be bullish, and then I'll piece out of my shorts on the way down, build back into longs even further, and then look for the continuation of the upside. But I'm without a doubt remaining on the bull side of this market for this month until the market proves me that I'm wrong.
All right, Derek, they want a specific stock, anything you're looking at now that you kind of have a setup that you're looking for. What could you bring up for us?
Sure. So I'm in 16 long positions right now as we're having this conversation and two shorts. So I've got a book and I could talk my book. It's pretty diverse. I'm in Bank of America. I'm in Chevron. So I got some energy exposure. I got some financial exposure. I've got growth exposure in Seminole One, which I think could get a decent secondary move today.
Let's
After
talk
the
about
data
that
dog
one.
earnings,
That's an
which are
interesting
phenomenal.
one.
That's a laggard trade.
Yeah, let's talk about that one. That hasn't moved much. Sentinel One. What do you see here, and what do you see on the setup? What should we maybe be looking for to show us that conviction that Sentinel wants that lift?
So the first thing I would say is I like the company. And even though I am really a technical trader, I do like to have a background in fundamentals with my approach when I'm getting involved in different stocks. I like the
I like it.
company. It's a buyout candidate in my opinion, even though last earnings season the CEO specifically came out and said we are not for sale. I'm not looking to sell the company, but I do think that this is a potential buyout candidate from a bigger player. So I like having that potential tailwind behind me for this type of name. It's been basing out here in front of 15. Took a little bit of a hit when the FTNT earnings came out last week, but the Datadog report this morning, and it could trade as a secondary to that, was so excellent. So I'm looking for this thing to lift off this base that it's at, that's been building out around the $14 to $15 area. And then you've got bigger resistance into 17, 18 that I want to see if it can go after. So sitting on that one. And if I would pick one position that I'm not in currently, not to change the subject on you, the one I'm looking at for today that I'm not currently in, which I may or may not get in, we'll see how it sits up during the day, is Carvana, actually.
Okay.
Trading well post earnings report has pulled back pretty deep, still a pretty large short float, really tight inside day yesterday with relative strength. If that can clear through 33 / yesterday's high and there's relative strength and growth today, I want to see if this thing can squeeze, and I might go after that for a new entry.
Love it. Always good to have you, Derek. Of course, if you guys want to check him out, learn a little bit more about prop trading, you guys see that QR code right here. Just go ahead and scan it up, guys. Take a look at it. Always good to have you, Derek. And like I mentioned, I might have to have you on my swing trading show, talk a little swing trading action. It's always good to be a little bit of a mix, and I like that mix. You know, going with what works and your all-in approach is definitely something to learn from. Guys, check him out. Like always, it's good to have you on, Derek. We'll bring you back on.
I'd love to do it. Thanks, guys.
Thanks, Derek.
All right, let's go ahead.
Thanks, Derek.
Let's get back to the markets. And like always, you guys can learn a lot more from Derrick. If you guys want to check him out, definitely you guys see that link below. Check him out. Hit that ebook if you guys want to get it, scanning it one last time here, and we'll get back to the markets. T3, of course, unlock your trading potential. If you guys want to check it out, elevate your trading game with T3 Live. Let's get back to the action. How are we looking here, Joel?
I just want to, before we go back to the action, let's move on here. I just want to bring, Derrick's conversation just into perspective here too, because, he's a good trader, T3, great company, like we've said before. And what I've been pretty good at doing over my trading career is separating my long-term thoughts from my short-term thoughts. That's why 3-4 days ago, I was with Derrick. I'm like, I feel like we're oversold. We were calling for a bounce because we were oversold. We've got that bounce. Does that bounce continue here? He makes me think that it can continue. So as much as I was bearish this whole first half of this show, and I still am bearish for 2024, and I'm not coming in buying stocks in my long-term investment portfolio because I just think, I think in 2024 it's going to get rougher. Me and you, Money Mitch, have both said, we set up well seasonality here. So you can be overall bearish, but short-term bullish. It's okay to do that. I think the bulls are still in control here, despite, IWM not having a great day yesterday, TLT, but we're still above 85 on the TLT. There's still reasons to be long from a trading perspective here. And I think I'm still biased with Derrick. I think I'm looking, on my trading account here at potential longs. The S that he talked about sets up fairly well. It's a laggard trade. And obviously, I think this market could come after laggards, to your point here, Joel. I mean, that's what happens when, you start going like Datadog was a total laggard move. A total laggard move. The stock's sitting on the lows and they rip it higher. So what does that mean? It means other laggards can move here as well. So I think it's very important as a trader to, separate your long-term and short-term thoughts. If you're a long-term investor, buy good companies, a reasonable valuation, stay invested. But, if you're a trader and you're trying to trade your long-term account, you can have, thoughts where I'm going to sit with cash, my long-term stuff, make 5.75% right now. And that's on Ontario GIC. That's where they're at right now. And, just let that just be. I'm making 5.75% of my long-term money, and that's good. But from a trading perspective, you can still, trade. And, I don't put GICs in my trading account. I'm trading on margin all the time in my trading account, using it up and going long, short. Sometimes I'm hedged. A lot of times I'm hedged. But sometimes, to Derrick's point, is I'm biased long. I still think I'm biased by the dip. I'm pretty much fully with Derrick here in the short term.
We did go down. I mean, the sell-off yesterday, and I kind of it's your feel for the market and the market structure. And when we were talking like the last week and a half, it was like we were going down, and the VIX was like getting a little, but it just seemed the buyers were there. There weren't whooshes. It was the short, you could get short and be your way a little bit, and then there'd be a big bounce, and so it kind of feels like the way we went down yesterday. The buyers are like they're still out there. Like the way we went down and got the bounces and then had a strong close. So I'm with you on that. I'd be much more with you if we could take out Friday's high, which was also the weekly high. So we're there. We're first we got to go green today. First things first, and then get above there. Things open up. Pablo asked for a quick technical on Apple, and they bought the dip on Apple. Traded down 49 cents today. You've been in a real trading range here with Apple. Yeah, we did sneak above 180 a couple times. So you want to be holding out for the 180. The 182 is 4-star resistance. So get up there. Make sure if the longer it takes to get up there and kind of if it starts to roll over. But that's the next major resistance for Apple's 182. And the high close of the move at that time was at 180.71. It just seems real thick between 180 and 182, but I didn't lose my bet to Dennis yet. I don't know. That one could go
I forgot all
on.
about the bet. So give me the parameters here once again.
You had 160. I made 180. I don't know. You guys are talking.
You have 200?
I got 200.
I have 160.
I can't believe I did that. I can't believe I did that. 200.
Well, you know what? You're sitting right back here at even. It's right in the middle. So it's come all the way back. You were looking bad when it got down to 166. It looks like you were going to immediately lose that. But we got this underneath demand and tech. You know what? Maybe an end of the year rally. That's the kind of stock. Maybe they continue to buy. Doesn't have any debt. Not affected. 0% finance. What has 0% financing left? iPhones. There's a lot of things with 0% financing. So, I mean, I could get bullish Apple. I could turn around. Maybe I want out of the bet. Maybe you want to let me out here right now. I'm more
I
bullish
will.
Apple right now than I was a week ago. I'll tell you
We're
that.
having more fun.
What
We're
about
having more fun talking about it. What do
Celsius
you got for us,
Holdings?
Mitch?
Celsius Holdings. We got to get to that
Ooh.
one. That's a retail favorite for sure. Q3 EPS 89 cents beats the 46-cent estimate. Sales of 384.76 million beat the 348.94 million estimate. And we all know how it's just the hot energy drink out there. And Bang has been losing market share. Monster has been losing market share. That's why Monster bought Bang in the first place, but now they can't compete against Celsius. So will they have to go and buy Celsius also? Things like that we got to be thinking about, but definitely CELH continues to beat.
They love this stock. I mean, it's a stock that's loved. It's a stock that's held up very well too, and the move that it's had has been nothing sort of incredible. I don't drink drinks, so I don't know. But 2020, this is $3 now, $188. So
Crazy.
I mean, the movement is real. Is it the new monster? Oh yeah, like from a stock perspective,
Without a doubt.
It's been the monster. It's been way better than the monster here for a while here now. I mean, MNST in the same time period went from 30 to 56. So Celsius is definitely come in and is the monster here right now, the monster stock anyways. So hard to fight that relative strength. With that being said, I'm not chasing things up 6%. So it's one of those trades where Derrick was just saying, sometimes it's okay to just sit on your hands.
Could you believe this went back and tested the low of the move last week? I mean, it just even on
Then they did the
Thursday.
3-for-1 stock split and that
Yeah,
kicked it off again.
they saved that.
Yeah.
This candle right here is the candle of indecision. It had a day where it went from 198 to 180 and closed at 181.5. So pick the only number I could give you on the upside right now is pre-market high 196.50, but that's $8 away. So this one is faded. But you know what? The data dog hasn't given up. It found support under 95 and we're right at the $95 area and now coming back up to the pre-market high. So I did have one Celsius drink and it was okay. Todd Gordon favorite. Todd, if you're listening today, he has been all over this stock. He's loved it.
Have you heard of the cocoa? Have you heard of cocoa?
Oh no, what's that?
I got to teach you guys sometimes. Change Agent coming in here with a new monster. And I give a shout out to Change Agent. This is Vita Coco. And so this is a coconut water drink. I remember when it used to be in 7-Eleven, I used to be able, I was not able to hold this in stores because the demand was so high. Now it's actually higher than it was back then. You guys can see that monthly chart. This is a very similar chart to CELH and has been continuing to grind higher.
Oh, good one. Okay.
Two things. One, I just want to mention that the TLT is rallying here. We're getting back a lot of the loss from yesterday. That's probably good for the IWM. I did just increase my exposure to IWM here a few minutes ago here, because TLT started moving higher here again too. I do think from a day trading perspective that IWM should probably go green here if TLT can stay up here. So it's still trading in the red, but I think that's good news for IWM. And then secondly, I want to highlight Biomarin here. Elliott's taking a stake in BMRN here. So we're seeing a huge pop. We know Elliott moves stocks maybe better than any activist investor out there. Biomarin's up 7% right now. New stake from Elliott being reported by Reuters.
Boom, you got the pop just over 82. That was an area of a couple highs, except for this sneaky high. If you're holding out for more, 84.27. That was your November 1st high in Biomarin. Boy, he was buying the dip. He must have been buying the last couple days and getting the pop.
All right, there's some remaining headlines, but I'll keep touching them on live trading. Stellantis with Ram Trucks, Planet Fitness's earnings, and TripAdvisor. We'll continue that on live trading. Time to wrap up the market here. What's your last outlook going into the market here, Dennis?
I think today, trader hat on here, I'm looking at buying stocks here this morning right now because this TLT rally is significant. It's coming back here, getting a lot of the losses from yesterday back, which is impressive here. We know IWM followed suit yesterday. I think it follows suit again. Trading in the red, lots of, IWM components, lots of banks trading in the red here. Lots of, cyclicals trading in the red this morning. I think it's an opportunity with the trading cap on here to pick up stocks right now because I think we're going to go green.
It's a sleepy market. And one thing they say is don't sell a sleeping market. Support is, I mean, mid range on the session right now. So you got to look at it. It's 74. That was right near Friday's close. But the big bogey is the close from yesterday. That was a high close of the move at 84.75. And if the Bulls want to get this thing going, really put the hurt to the Bears, you got to get above that double top at the 43.90 area. So couple bogeys for the Bulls.
All right, we're getting a little love here from AC 2000. We want to give a shout out to him, of course, saying that Joel, Triple D, Money Mitch, great show. I have learned so much in the past months. So thank you. And that's really what we do this for. I know that Dennis and Joel would quit tomorrow if you guys weren't learning, right? That's the truth. They're trying to pay it forward for you guys out there to go ahead and continue learning about the markets, being ready for the open. And you guys see it. It's always about kind of being nimble, moving around. You guys see Dennis sometimes flip. And the reason why, he knows that's his job. His job is to make money. His job a lot of the times is day trading, right? Ending of the market, all in approach, all in, all out at the end of the day. And I think that's important to kind of keep up with, guys. Learn from these guys. You guys have some great mentors to learn from. Reach out to them if you guys have any question. Dennis Dick always keeping up with his Twitter, and Joel Elconin, you guys can always catch him on Premarket Prep Plus if you guys are interested in learning more. Always good to have you guys. Let's do the guest for tomorrow, Joel, and wrap up Premarket Prep.
Jeremy Schwartz from Wisdom Tree is going to join us and give us his perspective on the markets. Everyone, be safe out there, and not only do we learn from you guys too. So
we do. This is the main reason I do the show here too, is I learned so much from the chat. I mean, you bring people on, and obviously you get opinionated, and then you hear another opinion, and you're like thinking about it. Even Derrick coming on here today, sometimes I get that blinders on where you start talking, you see the economy not doing that well. The economy is not the stock market a lot of times here, and Derrick makes a lot of good points. We set up actually technically fairly well here right now to continue this bull run here. So I think, if you're getting short stocks here for next year's recession, I think you're early.
All right, guys, like always, keep up with Dennis Dick, Triple D Trader, and at Spoos. All right, guys, get you over now to live trading. That's coming up next. Don't go anywhere. Stick right here. Like always, we got a lot more for you guys on Benzinga. Let's keep it going and see what we can come up with today.